Wyoming prides itself as a state that embraces tradition, so it might not be the first place you'd expect to see a bold step forward in the rise of cryptocurrency. But here we are at a rodeo sponsored by Kraken, the nation's first cryptocurrency bank. Kraken set up shop here because of the state's new crypto-friendly laws. When it comes to digital currencies, the Cowboy state is reclaiming the frontier.
Bitcoin? I have, yes sir.
Yeah, I actually have the Kraken app on my phone.
Don't know very much about it, don't really understand it.
It's a liquid currency, and other than that, I don't really know.
A lot of people are making a lot of money off it, so didn't go great for me so far, but it's a learning process.
Volatile, I think volatility is the biggest concern.
You know, anybody who watches CNBC every now and then kind of caught the crypto fire.
We're here in Cheyenne, Wyoming. This is the state's capital. It's also looking to become the crypto capital of the United States. And one of the big reasons a lot of these tech companies have been moving here, friendly regulation.
People may have a misperception about Wyoming and the West. You know, we're really a live and let live place.
Hi, Sheriff.
We honor independence, hard work, coming up with your own ideas. And we're also, you know, a small state. We know each other, we trust each other. Handshake still means something. And so we're a place where a new idea comes, we're willing to give it a try.
Honestly, a lot of people ask me how I made the personal transition from New York to Wyoming, but the line I always say is, I like freedom. And in New York, you can kind of do whatever you want, be whoever you want, 24 hours a day. Wyoming, same thing, now for very different reasons and in different areas, but similar in that regard. Just like the cryptocurrency industry, we're forging a new path. Wyoming has always prided itself as the cowboy state, being on the frontier. We are on the frontier of finance.
With up-to-the-second pricing and powerful trading features, we are your one-stop shop to buying, selling, and trading Bitcoin and over 40 other cryptocurrencies.
Kraken, as one of the oldest and largest cryptocurrency exchanges and financial services providers, is always looking to kind of figure out how we're going to do this sustainably. One of the biggest risks to the business was this legal and regulatory uncertainty risk.
Some of our most respected technology companies have expressed at least some uncertainty regarding cryptocurrency.
Even just getting any level of clarity will help move us forward.
All of the existing regulatory options and licensure regimes were suboptimal. Uncertainty is always the killer for business. You give us certainty, we can route around it anyway. But if you give us uncertainty, it's really hard to make business decisions. And so Wyoming was one of the many states we talked to, and they moved the fastest.
While some people are excited about Kraken and other crypto banks in Wyoming, there are many who question this move. But before we go any further, let's talk about what this new technology has to offer.
What cryptocurrency does for the first time is create digital scarcity, and that is revolutionary. We take this for granted in the physical world. If I have a coffee cup, there's only one of it, it's in my hands, and you don't have it, I have it, it's in my hands. That was not possible before the invention of Bitcoin. Online, if I have a JPEG of a coffee cup, well, I can make 1 million copies of that JPEG and it would be identical to that first one. Bitcoin invented a system that allows you to have unique units.
So what's so interesting about Bitcoin and other cryptocurrencies is that you can own your financial assets outright. You have an outright property right in those. We have a technology that makes digital assets unique, provably unique, and once something is provably unique, it may or may not have value as a collectible.
Satoshi Nakamoto, the pseudonym for the anonymous creator of Bitcoin, named the white paper that laid out the philosophy for his invention a peer-to-peer electronic cash system. This peer-to-peer mechanism is another feature that Bitcoin has introduced to history.
Before the invention of Bitcoin, for two people to transact with each other, always required a third-party intermediary, right? So somebody like a bank or PayPal or something like that. But at root, what Bitcoin did is develop a way to do what PayPal does without the need for a firm. Individuals can transact with each other directly without having to employ any one trusted intermediary. It's a new way of doing things that has a lot of potential for innovation.
Practically all children see banks as the place where daddy keeps his money safe.
We in the developed world are very lucky and we take for granted access to intermediaries. So it's trivial for me to go down somewhere and open a bank account as somebody that is an American citizen with good credit.
How about opening a checking account for your new business?
Yes.
But that's not everybody in the world. In fact, most people in the world are not in that position and don't have easy access to these intermediaries for financial services. But with a cell phone, cheap smartphone, and free and open source software, you can on demand create a Bitcoin address and start receiving and sending payments.
Historically, if you wanted to send aid or money to some unstable regime, you couldn't avoid the regime. That's why you have sanctions and embargoes, is because money sent there gets extracted by the authoritarian or dictator or whoever's in power. Now, you can actually send directly to the people.
Whether the benefits of decentralized anonymous currencies are clear or not, the fact is, this new way of looking at digital currency spawned hundreds of other cryptocurrencies, paving the way for a revolutionary new world. Oh, wait.
The value of this money is like totally unpredictable.
Those, though, hitting their lowest levels since July.
Give me the money to go to freaking school.
Investors crying scam over cryptocurrency inspired by the hit Netflix show Squid Game.
For a financial historian, crypto craze looks exactly like that, a craze.
They're opening up to herald the arrival of Satoshi Cyberchrist.
It looks like a technology or innovation that, like many previous booms, has a definite core value to it that is worthwhile, just like the railroads were worthwhile. And in the late 1990s, internet companies like Amazon were worthwhile and transformed the economy. But there are also companies like Pets.com in the late 1990s that are no longer with us, and with good reason, their sock puppet notwithstanding. Crypto looks a lot like that.
One of the things that's so seductive about the crypto movement is that they tap into very important values, but they don't spend much time discussing how their proposed solutions are the best way of honoring those values. And if I'm right, then the crypto movement is a false hope. It is not providing an alternative to our public monetary system that will actually allow us to avoid harms of totalitarian surveillance and control.
Bitcoin and other cryptocurrencies, as the name would suggest, have an ambition to be currency. They have ambition to be money. The big gripe that many people have and economists would raise is that money is generally defined by a triad of functions. It's a unit of account, it's a means of exchange, it's a store of value. Cryptocurrencies, though, are extraordinarily volatile, though, in their value relative to each other and relative to established currencies like the US dollar, which has led to a kind of ambiguity as to what precisely cryptocurrencies are, the name notwithstanding.
And the problem in the US is that we have a fragmented regulatory system. We have an alphabet soup of agencies that all have overlapping authority to a certain extent and all lay claim to cryptocurrency based upon that agency's statutory mandate. And so cryptocurrency doesn't fit neatly into that. As SEC Chairman Gary Gensler recently said, he said crypto stands astride the regulatory system.
Standing astride isn't a sustainable place to be.
And I think that's a perfect analogy.
The IRS may view it as a form of property. The Treasury Department may view it as a currency. The Securities and Exchange Commission views it as a security. And the commodities regulators view it as a commodity, which gives you a really good sense already of just how vexed and uncertain this is.
Like David said, uncertainty is the killer for business. And that's where Caitlin saw an opportunity for Wyoming to jump ahead and solve a big problem.
Back in 2017, there was suddenly, all at the same time, a concerted compliance effort by pretty much every bank in the United States to close the accounts of anyone who was touching cryptocurrency in any way. And as a result, the industry was just debanked en masse. And so Wyoming wanted to help solve that problem. And the regulator that was the most challenging in Washington, D.C. was the FDIC. And the solution was, let's create a non-FDIC insured bank charter so the FDIC can't block this.
Caitlin was part of the civilian blockchain task force that helped craft this new bank charter called a Special Purpose Depository Institution, or SPDI. It's essentially a bank that facilitates trading, buying, investing, and exchanging cryptocurrencies.
The SPDI legislation came together and we said, we'll do this.
So why did Kraken choose Wyoming?
As you said earlier, I think there's a lot of jurisdictions, but we believe that Wyoming is the best, and specifically because of this SPDI regime.
Being able to be a bank allows us to offer traditional banking products, traditional other financial service products, securities, commodities, things like that, as well as cryptocurrency, and side by side. Now, it may not sound like a big deal to put these things side by side, but when you start taking these kind of like fundamental building blocks and putting them together, you can build something very new.
The fundamental difference between the Kraken SPDI crypto bank and an app like Robinhood or Coinbase is that in Wyoming, Kraken and all other SPDI recipients receive oversight from the Wyoming Division of Banking, which limits how they can operate to protect consumers. SPDI banks in Wyoming must hold reserves backing 100% of the cryptocurrencies on deposit, and they can't lend out crypto and take interest.
So the way to think about them is they're not that different than the payment companies, except they're actual banks that have access to the Federal Reserve System in theory. They're designed to make money on fees by providing a valuable service for which customers are willing to pay fees. It's not the traditional way that a bank makes money, which is through what's so-called spread income, taking a cut between the interest revenue that the bank earns on its loan portfolio versus the interest that it pays you on your deposits, which is pretty measly. That's not the way SPDIs are designed to function because they can't lend.
Wyoming's crypto banks, including Caitlin's Avanti Bank, which is now Custodia, are now setting their sights on gaining master account access to the Federal Reserve, which would allow them to seamlessly settle dollar transactions with the US dollar payment system.
And this opens up a whole new pathway, opens up services that don't exist in the industry right now to be able to bilaterally settle a US dollar and a Bitcoin at the same time. That can't be done right now because of the separation of Bitcoin custody and US dollars into different legal entities. Once we're able to do that, we take a lot of the risk out of the industry. Wyoming handed to the Federal Reserve a means through which it can responsibly, in a safe and sound manner, integrate digital assets into this old traditional system that settles on much slower settlement cycles and allows reversibility of payments.
This has never been done before, and some believe it could expose the Federal Reserve to the systemic risk inherent in cryptocurrencies.
Only banks can have access to Federal Reserve master accounts, and this is mainly insured banks by the FDIC. So entities that are regulated by the FDIC and also in most instances regulated by the Federal Reserve itself. And this gives the Fed a greater degree of assurance that the entities that have access to the payment system are regulated, that there's someone there, making sure that they're adequately capitalized, that they have proper IT systems, operational risk controls in place. When it comes to a SPDI, they're not regulated by the FDIC because they're not FDIC insured. They're not regulated by the Fed because they don't have to be members of the Federal Reserve System.
If these entities can become, if they actually begin to work within the Federal Reserve System, then it is taking a very significant step toward institutionalization within the existing financial system, which from my standpoint as a historian is actually a logical step, even though it might be one that other cryptocurrency advocates would view as a betrayal of the original impetus for these assets or monies.
The challenge that we've had is that, at least as of now, the Federal Reserve has not approved any of the applicants to get access to the Federal Reserve System, which is important. It's not critical to the ultimate success, but it is an important factor.
The SPDI legislation is only one piece of Wyoming's efforts to embrace cryptocurrency. As of 2022, they've enacted 24 laws designed to attract the fintech industry to their state.
It sounds boring, but the most important thing Wyoming did was define which law applies, so that now the parties to a transaction know that the technology is backwards compatible with the legal system. There are a lot of folks in this industry who like to say the mantra, code is law. We don't need the law. Well, until you get into a dispute and then someone sues you and drags you into a court and you realize the judge may or may not have the right roadmap for adjudicating the dispute. So most folks actually do care and should care that the technology fits properly with the law. But the law needed to catch up with the technology.
My name is Jordan Dean, and I'm the artist behind the Kraken mural behind us. I felt like Cheyenne always has this very Western thing that we get stuck in, and so I thought, let's just do something that's kind of foreign to what people are used to seeing. And so that mixture of Kraken and crypto with a little bit of cowboy, I think is pretty cool.
In the business world, there's this concept of the innovator's dilemma. It's like, why don't big institutions innovate to kind of create new products and services? And you see startups kind of come and eat their lunch, right? The same is true for regulatory bodies and national or state governments. New York is not going to be at the forefront of cryptocurrency regulation or legislation because it is the center of the existing financial services ecosystem. And it has all of the incumbents' interests to look after. And it's a rational choice of them that they would look after them. So it's not going to be New York. It's not going to be California with big tech firms. It's going to be someone like Wyoming.
One of the problematic dynamics that we've seen emerge recently is the tendency for certain industry actors and crypto advocates to target state-level actors, particularly in small states who may be susceptible to aggressive lobbying, to create regulatory regimes that are friendly to industry concerns without the appropriate safeguards, and to use that as a beachhead to weaken federal regulations or force federal regulators to adopt an industry-friendly regime. So rather than allowing this sort of state-by-state race to the bottom, we need to be very clear that the future of federal monetary regulation should be comprehensive and coordinated and address the wide range of stakeholders who are inevitably going to be affected.
At any moment when you have endless experimentation and novelty with a new technology, regulation eventually arrives, typically out of concern for the end consumer or concern that the technology poses some danger to society or a system at large. The United States is not unique, but it's unusual in its tendency to use the states, unwittingly perhaps, as guinea pigs for working out a regulatory regime that might ultimately be successful on the national level. Of course, by contrast, if Wyoming is the virtual site of a financial implosion that takes down some major bank, well, then you have the opposite lesson.
The biggest systemic risk they need to worry about is innovation. And if we don't innovate and allow people to plug into the Federal Reserve System, there's not going to be anything to regulate or worry about it. That's the biggest risk to the system. And we've already seen in the UK faster payments and direct access to their central bank, and the world didn't fall down.
If you take the early internet, it faced a lot of the same skepticism that cryptocurrency faces today.
Oh, that's that little mark with the A and then the ring around it?
At.
See, that's what I said.
Mm-hmm.
Katie said she thought it was about. And then it sounded stupid when I said it. Violence at NBC.
Allison, can you explain what internet is?
luckily, we had enlightened policymakers. And the Clinton administration put out their framework for the information superhighway. And they said, no, we can't envision what this is going to be ultimately used for, but we know there's potential here, and we're going to allow it. We're going to let the private sector lead. We're going to put reasonable guardrails where it makes sense. But otherwise, we're going to let American entrepreneurs do what they do best, which is innovate on open platforms. And luckily, they did that, and the US basically owned the internet revolution. You had to have a country that had a First Amendment, a Fourth Amendment, to allow for something like the internet to really flourish. So something like the internet or something like open permissionless cryptocurrency networks cannot flourish in China. They can't flourish in places like France and Germany that don't have a First Amendment. Really, the United States is the place with the values to make the most of this technology. And I think our policymakers really have a responsibility to live up to and have the courage of our American convictions to make sure this stuff can reach its maximum potential.
Wyoming is not afraid as a state to reach out ahead of the rest of the United States and lead. And this is just yet another example in that long history. The two most prominent examples of that are Wyoming gave women the right to vote in 1869, 50 years before the US Constitution recognized that. And Wyoming invented the limited liability company in 1977. And it took about a decade for the rest of the United States to recognize that.
What Wyoming is facilitating is the integration of cryptocurrency into the traditional financial system. And we still don't understand the full suite of risks that are associated with cryptocurrency. So I think in the future, should the cryptocurrency bubble burst, the spillover will be broader than what we think because of actions that Wyoming is taking.
This is probably the biggest bet that Wyoming has made in terms of attracting an actual industry to the state to move here. And I hope when we look back in 40 years, I don't think it'll take that long, but I hope when we look back that the seeds that were planted now really truly do create a whole new industry here.
Being on the frontier of law and technology can mean that you are the birthplace of a whole new industry, or a lesson of what can go wrong. It remains to be seen, in this case, if the frontier favors the bold.